Hey, what's up everybody? My name is Rainer and welcome back. So in this week's market analysis, I'd like to share with you this one thing that I see a lot of new traders doing. And what they like to do is actually basically to set their trades to break even too quickly. And by setting your trades to break even too quickly, you'll tend to be stopped up in the markets only to watch your trade go further in your favor afterwards. So in this week's video, I'd like to share with you on how you can go about to trail your stops accordingly and try to stay in the trade as long as possible and not a second extra if the market does go against you. So all this and more in this week's market analysis, and I'll see you there. So this is the weekly chart of copper, and I think if you recall, a couple of weeks back, we talked about copper and we mentioned that in the grand scheme of things, right, looking at the bigger time frame on this weekly chart, copper is still in a downtrend. And why is that so? So looking at which we have a series of lower highs and lower lows. So we have lower highs here, over here, over here, over here, over here. And I think a couple of weeks back, price was down here at the 50 EMA. And notice that on this weekly chart as well, the 20 and 50 EMA seems to be holding quite well for copper. So we see this zone over here where price seems to be, being rejected off. And a couple of weeks back, this was the scenario that we were in. We had this inside week candle where price was actually contained within the highs and lows of the previous week. So another thing to note was that price came into this previous support, turned resistance, right? This was a support, price traded lower, came back higher and tested this previous support, now turned resistance. So all these factors was actually going for us. And the thing I mentioned was on the daily chart, this was what price was doing. We had this consolidation on the daily chart, and we know that this was a key area, right? This was a key area because on the weekly we saw that number one, it was at a 50 EMA. Number two, we saw that it came into the previous support, now turned resistance. So these two factors was lining up. So at this juncture over here, what we had was we had the bulls and bears fighting in this tug of war. So why do I say that? Because for those who are bullish, why they are bullish is because of this higher highs and higher lows over here. So price traded into this previous resistance, then it consolidated over here, and there were these traders who are actually bullish who anticipate further breakup higher. So this is not wrong, right? Because everybody, depending on what time frame you're trading, you're actually trading basically the price of your current time frame. And those traders who are looking at this daily chart, they have the short-term to medium-term bullish bias because of the higher highs and higher lows. So they basically decided that they are bullish. They place their stops below this swing low over here in anticipation of higher prices to come. And on the other end of the spectrum, we had the bears. The bears who we saw earlier, saw the downtrend of weekly chart, so they had the bearish bias towards the downside. So they saw this consolidation over here. They decided to go short, place their stop loss above this high over here. And honestly, we would never know ahead of time whether the bull or the bears will win this battle. But the only thing we know is that looking based on the weekly chart, the path of least resistance is towards the downside because we saw the trend is still clearly intact and towards the downside. So in this scenario, the bear took control of it, traded below this swing low, taking out the stops, and now currently traded much lower over here. And the thing about this trade is this: those traders who got short, that's good, right? You got short, you're in the money, so that's a good thing. And what they are actually thinking of right now is basically to protect their open profits. They're scared to give back profits to the market. And the moment that you fear of losing open profits, it's going to be very hard to ride the trend in the market. So say for example, you got short somewhere in this middle of this consolidation, your stop is just somewhere around here. So you're currently up maybe about 1.5 R. So if you do set your stop loss to break even, which say for example over here, you set your trade to stop loss to break even. So what could potentially happen? What could potentially happen is price traded higher, trigger your stop loss, and then trade lower once more. Am I right to say that? Because you are actually putting your stop loss into an area whereby here could be a previous support, the resistance, and by putting your stop loss down there, there's a good chance that price may, just come into that zone, traded slightly higher, taking out your stops, and then come down lower. So, however, if you leave your stop loss at its original location over here, then yes, you have more I would say, a more greater wall of defense for price to actually having to go against you before stopping you out. So for me personally, I would rather leave my stop loss at its original location and let price tell me when to trail my stop loss accordingly. So a scenario that I envision would be this. Say for example, price does trade lower, then it traded higher, then it traded lower once more. So right now, if this does happen, I have a structure clue from the market on how I can actually trail my stops, because I have this swing high over here. And when I have that swing high over there, I can use it as reference to trail my stops accordingly. Perhaps I can just put it just above this swing high. And it makes sense because this swing high could potentially act as resistance in the market. So it does make sense to actually trail the stop loss according to the structure of the market, as it gives clue to where is the ebb and flow and where it wants to go. So that would be how I would actually manage this particular trade. So that's all for copper. Up next, we look at soybean. So the soybean trade is another trade that we've mentioned, I think, last week or for quite a while right now. Looking at the weekly chart, you notice that the trend is still bearish. It's still towards the downside. And you notice on the weekly chart, soybean, it has been respecting the 20 EMA. And that aside, another thing to take note of is you see a series of lower highs over here, over here, over here, and over here coming into this structure support. And this support is significant. It is a multi-year support or multi-year lows since I think 2014, right? This lows was created in 2014. And you see a series of lower highs coming into this support. It's telling you that the bears are in control. Because whenever price comes into the support, the bulls couldn't really push it up very high. Just look at how much effort did the bulls generate. Say for example, it came test into this support, it rallied higher. Test into it once more, it rallied slightly higher, and then it came down once more. So what's it telling you? The bulls are trying to push price higher, but the bear are clearly the one in control. They are pushing price lower each time the bulls attempt to rally higher. So this support was the area, and it was actually broken this week. So I think last week I mentioned whether we do not know whether it will be a real breakout or simply a false breakout. We will never know ahead of time. The only thing we can do is to plan our trade and manage our downside. And we'll let the market decide what it wants to do. That's all we can do as traders. We cannot predict, the price is bearish, it's definitely going to break out towards the downside. No, it doesn't happen. It could simply do a false breakout towards the downside and then rally higher. Who says that isn't possible? That is possible. So that is why we always have our stop loss in place. We always have to admit that we could be wrong. Then only then will we take the necessary measures to play defensive so that we never blow out our trading account. So looking at the daily chart, it's even more clearer that you have a series of lower highs coming into support. So I got short when price took out this swing low over here. My stop loss was about 2 ATR over here. And same scenario as copper. I'm not going to shift my stops to break even just yet, just because I'm slightly in the money. Does not make sense. Instead, I will watch how price unfolds in the coming week. Whether it makes a new structure, a lower high along the way, then I'll look to trail my stops accordingly. Because by setting my stops to break even, say, to this area over here, I set my stop loss. What could potentially happen is price traded higher, come into this area, which is what everybody knows as previous support, then resistance, and then trade lower. So if I'm going to put my stop loss and break even at that area where price could potentially reverse from, would I be just stopping myself out of this trade only to see price goes in my favor? Does not really make much of a sense if you ask me. So my stop loss is still at its original location, and I'm not going to mess with it for now. So up next, let's look at another chart, which is the pound yen. So the pound yen, as I mentioned on the weekly chart, it is it's a bullish pair. You see how price is respecting the 20 and 50 EMA. You see that over the last 1, 2, 3, 4, 5, 6 weeks of higher closes. And what happened this week is price traded into this key swing high over here. It's a multi-year high. So it was definitely a key level if you ask me. So look at the daily chart, it's more apparent that price traded higher, taking out the stops above this swing high, and then it had this bearish engulfing candle over here. But if you ask me, you look at the bearish engulfing, it's not really very convincing. And what happened is I believe there are traders who got short, placing their stop loss just above this swing high over here. I'm guessing that would be so, because that's what a typical setup traders will look, right? Price coming to resistance for bearish engulfing, I'll take a short, put my stop loss above the high. So I'm guessing that's what traders will do. Whether you trade lower We do not know. We do not know. But my bias is still towards the upside. I do not intend to look to short this resistance and anticipate the price will come back lower. It could happen, but I would rather trade the path of least resistance, which is still towards the upside based on the weekly chart. So looking at the daily chart, here's what I envision. Say for example, over the next 2 weeks or 3 weeks, price traded lower. Couldn't really get any lower, then it traded higher. Push back down once more, then it trades higher. So basically it's doing a consolidation over here. So if that does happen, I'll look to place a buy stop order above this high over here and anticipate a breakout higher. So that's my game plan for this particular pair, and we'll see how it unfolds in the coming week. And last but not least, dollar yen. Again, similar as the pound yen, is still very bullish on the weekly chart. You see how price is respecting the 20 and 50 EMA, and it seems to be respecting the 20 as of now. So we see this consolidation over here. In fact, you know what? Let's look back a little bit more. This is the chart of dollar yen weekly chart, and this price tends to do this very similar pattern. It does a very strong impulse move, then it goes on and sleep for quite a while, forming this consolidation. Then it breaks out once more. Then it likes to sleep for quite a while. Then it breaks out, did a slight retracement, and it does another strong breakout. So right now, price has been sleeping over the last few months, and this candle over here could be just the momentum it needs to break out higher. So that is what I'm watching at. There could be a possibility that dollar yen could be trading higher in the coming weeks, because you look at the size of this week's candle, it's definitely bigger than the last 10 or 15 candles. Just you can look at the ATR indicator, it's definitely more than usual. So there is a meaning for it if you ask me. We have the trend with us, we have a candle that closed bullishly compared to the last 10 to 15 weeks. So for me, what I'm looking at is looking to place a buy stop order above this high over here and see if price can trade higher in the coming weeks. So that's all I have for you guys and girls this week. So I hope you guys find this video useful, and if there's any comments, feel free to leave it below. And as always, if you have any questions regarding trading, you can drop me an email, you can leave me in the comments below, or drop me comments anywhere on my website. I'll reply to all comments and answers and questions. So with that, I wish you boys and girls good luck and good trading. I'll talk to you soon.